Hi, everyone. My name is Moe and welcome to another episode of Income Investors. With me today is John Whitefoot, and we're going to be talking about a dividend play that's in food space. Before I go into any details, I want to let you know that anything you hear in this video is for information and educational purposes only. Investing comes with risk. To learn more about risk regarding investing, please see the description below. With over 2,350 companies listed on New York Stock Exchange and more than 3,625 on the NASDAQ, there are a lot of stock to consider. Fewer, though, if you follow Warren Buffett advice, which is never invest in business you cannot understand. There are a lot of companies that fit into that category. One industry most investors are familiar with is, or at least on the surface level, is restaurant business. And that makes today's pick. Wendy's Co., traded on NASDAQ under symbol WEN, a high yield, no-brainer stock. John?
Yeah, thanks, Mo. Wendy's company often gets overlooked in the crowded restaurant industry, but that could change. They reported strong financial results, which included strong double-digit global same-store restaurant sales, the opening of new restaurants, and management said it expects the momentum to continue throughout 2023. For income investors, Wendy recently doubled its quarterly dividend payout to 25 cents per share and announced a big $500 million share repurchase program. The company, which is known for its made-to-order square hamburgers and frosty desserts, and is a franchisee, operates roughly 7,000 restaurants worldwide. The number is expected to grow over the coming years with a net annual growth of 2 to 3% in 2023 to 2024, and net unit growth increasing to 3 to 4% in 2025.
John, but before we go into details, I learned a very interesting fact. Wendy's created square burgers to make it look like it's more fresher. I don't know how much truth there is, but it's a podcast that I was listening to recently. They were talking about it. Anyways, the restaurant industry was decimated during the pandemic. How did Wendy's do?
Like most well-known and well-established quick service restaurants, Wendy's was able to adapt and grow during the pandemic. In fact, it's been reporting a raft of strong financial results since before then. In 2022, total revenue increased 10.5%. Adjusted revenues were up 12.1%. Full year operating income slipped slightly to $353.3 million. And net income dipped slightly to $177.4 million or 82 cents per share. But adjusted EBITDA climbed 6.6%, and free cash flow was $213.1 million. And adjusted earnings per share increased 5% to 0.86 cents. But I think it's important to consider those numbers more broadly. They actually don't cover the total picture of what happened in 2022. During the year, Wendy's reported its 12th consecutive year of global same-store sales growth, second consecutive year of double-digit two-year global same restaurant sales growth. Global digital sales reached record highs. It opened more than 275 restaurants and it has more than 300 potential franchisees candidates in the recruiting pipeline. And commenting on the results, company president and CEO actually said the company has laid the foundation for continued growth for years to come. So that bodes well for 2023, 2024. And true to his words, first quarter 2023 was a lucrative quarter. First quarter revenue was up 8.2%. Adjusted revenue climbed 7.9%. First quarter operating profit improved by 12.8%. Net income increased 6.4%. Adjusted earnings per share grew 23.5% to 21 cents, while adjusted EBITDA advanced 17.5%. Cash flow from operations jumped a whopping 152% to $53 million, and free cash flow jumped 43.5% to $63.7 million. It was just a great quarter all around. And with regards to the strong first quarter results, management said it expects to deliver meaningful growth for the remainder of 2023 and beyond.
Those are a lot of numbers to digest, but let's talk a little bit about what does the rest of 2023 looks like, because I know the stock market cares a lot more about what's ahead rather than what has already happened.
Yeah, you're right, Mo. You can deliver excellent results, but if you provide weak guidance, your share price will more often than not tank. And that's just not the case with Wendy's. It reaffirmed its 2023 guidance, which includes global system-wide sales growth of 6 to 8%, adjusted EBITDA of $530 million to $540 million, adjusted earnings per share growth to 95 cents to $1, and free cash flow of $265 million to $275 million. And it also maintained its, more importantly, long-term outlook for 24-25, with system-wide sales growth in the mid to single digits and free cash flow growth in the high single to low double digits.
Interesting. And now let's talk about dividends, because, when I look at Wendy's, I don't usually see it as a dividend play, but I know they're decent when it comes to keeping their shareholders happy.
Yeah, and right now, income investors have to be happy. Back in January, the company announced that it was raising its annual dividend by 100% from 0.125 cents per share to 25 cents per share. And it's maintained that payout in the second quarter for an annual distribution of $1 per share for a yield of 4.47%. The company also is doing so well that it creates shareholder value through share repurchases. In late 2022, in all of 2022, it repurchased 3.5 million shares for around 52 million. And in the first quarter, it repurchased 1.8 million shares for around $39 million.
Wow. And let's talk about WEN stock price. I saw that they're beating S&P 500 and the restaurant industry as a whole. If you could explain a little bit more there.
Yeah, what's better than a dividend stock that just doubled its payout? Well, a dividend stock is also trouncing the market and its peers, and that's exactly what Wendy's is doing. Over the last year, Wendy's stock has rallied 42%. Over the same time frame, the S&P 500 is up 5%, and the Advisor Shares Restaurant ETF, which symbol is, I think, EATZ, EATZ, it's up 22%. Again, big year-over-year gains, but Wall Street expects Wendy's stock to climb considerably higher over the next 12 months, with an average share price target of $25.19 to a high estimate of $29. And that points to potential gains of 12% to 30%, which is significant.
All right, John, thank you so much for your analysis on Wendy's Co. Traded on NASDAQ under symbol WEN. Wendy's is one of the most recognized quick service restaurants in the world. It has a long history of reporting strong financial results, and it has been keeping its shareholders happy. You often don't think of Wendy's as a place where you'd get consistent dividend, but this company has been doing it. And as a matter of fact, it actually increases dividend by 100% recently. That's it for today. We'll be back with more income ideas in our coming videos. In the meantime, don't forget to like this video and subscribe to our channel.